So let's take a look at these slices. I'm going to go up $1. I'm going to go up $2, and I'll go up $3. And I'll go down $1. I'll go down $2, and I'll go down $3. So we are currently long 405 delta, so we need to sell 400. I'm sorry, yeah, we need to sell 400 shares as soon as we open this position. So let's go in here, and we're going to sell. $400 shares. Let's bring that over to the Analyze tab. And that brings us to a delta neutral position. Now, if it goes up $1, we're going to be long 178 deltas. If it goes down $1, we're going to be short 194 deltas. And if it goes down, then we can sell some of the shares that we purchased on the open to be delta neutral here. Let's see what the current stock price is. It's at $36.74, and we are buying the $35 straddle. So that's how we're going to enter our order. I'm going to buy the straddle, and we're buying 10 contracts. And we are selling 400 shares of stock. Now, the last thing we want to do is take a look at the chart again and see exactly where this stock is and where it has been. Now, it's very interesting that we had a pretty good run up here in the morning here. Looks like there were ample opportunities over the last 20 days to trade the stock. So hopefully this will be a winner for us. It looks like the shares are easy to borrow, so that's what we're kind of looking for. And let's give it a shot. Just make sure that we are in fact delta neutral here with the current stock prices, and looks like we are. So the only thing we need to do then is just to make sure that we can in fact get the straddle. So we're going to try the straddle first, and then the sequence. In the sequence, we are going to sell 400 shares short of the stock. It says easy to borrow, so hopefully we'll be able to get this position on. And then in our worksheet, all I did was make a notation that the Netflix was hard to borrow and the AVP was easy to borrow, so that's the one that we have selected here to do our trade. Now we're just waiting for this to be entered, and hopefully we'll be able to get our straddle here at the mid price. Let's keep an eye on the chart and see where we are. Looks like the price is just kind of hanging around right around $36.73. Hopefully we'll be able to get our price. If not, we'll wait a couple more minutes and we will go ahead and replace that order, cancel that order, and replace it with another order. So we've waited a few minutes here, and it looks like the it's been over 5 minutes now. It looks like we just got filled. Okay, now they're working on our short order. Unfortunately, the price has moved, so now we need to do 375 shares. Let's see, we have the straddle. Let's get rid of that. Let's see what we need in order to get delta neutral here. About 380 shares. We're going to be slightly long delta here because if we take a look at the chart, you know, it's up there, but it's not. Let's take a look at the 60-day chart. The price has come up a little bit, but let's go ahead and let's go to our Analyze tab. In order to be pretty much delta neutral. We need to sell about 390 shares here instead of 400 at the current price of 33.65. So we'll just go ahead and do that and enter that order. And it looks like we're going to, and we sold it. So we have now a delta neutral position. We are short 390 shares. We are delta neutral, and we are long the 35 calls, and we are long the 35 puts, and we are in a delta neutral position. Now, if the stock price should move up by $1, we will be long 178 deltas, so we'll need to sell another 178 shares of stock. If it moves down $1 to 35.66, we will need to purchase 200 shares of stock. And basically, what we'll do is, since we have 390 short, we will purchase those 230 shares out of our existing inventory and basically cover that short stock position in order to get delta neutral. Now, as I mentioned, you can do this as a semi-automated trading system. In other words, what we can do here is we can enter our order to sell another 170 shares once the stock gets to 35.65. I kind of like to do it around 200 shares. I like to be 200 deltas long or 200 deltas short before I actually go ahead and enter those positions. But you can enter the orders. For example, if the stock price goes up $1, you can short another 200 deltas at 200 shares at 37.69. And the way that you would do that is to go ahead and go to your sell tab, go to your trade tab, and say that you want to short another 200 shares. And we can do that at the current price. We can set the limit because we want to do it at $37.69. So we're going to raise the price at which we want to sell an additional 200 shares at $37.69, because our analysis tab is telling us that in fact that is where we will be long an additional 200 deltas. So 37.69 is where we want to go short. It's approximately 180 deltas, so we'll just bring that down to 180. At 37.69, we want to place that as a limit order, and we want to do it as good till canceled. We want to keep that order open. And if we go back to our Analyze tab now, what we want to do is we want to buy 200 shares at 35.67. So in other words, if it drops $1, we want to buy back some of the shares that we shorted here. We want to sell 200 shares at 35.66. So in other words, what's happening is you can simply put these orders in and let them run. So if you actually, and people are kind of like, well, gee, you're putting your orders in, you don't even know where the stock's going to go. That's correct. We don't know where the stock's going to go. But if it goes up, we're going to short another 200 shares. Now, how does this actually work in reality? Well, in reality, if we're up $1, we short some more shares, we are covered by our 10 long positions on for the 35 calls. So we're really back into a delta neutral position here.